Morning, everyone. Welcome to the Transportation and Commerce Committee meeting. Today is Tuesday, June 11th, 9 a.m. Madam Clerk, please call the roll.
Alderwoman Spencer.
Present.
Alderman Orion.
Here.
Alderwoman Schweitzer.
Present.
Alderman Browning.
Present.
Chair Cone.
Present.
We have 5 present. We have a quorum.
Thank you, Madam Clerk. With that, the next item on our agenda is the approval of the meeting minutes from Tuesday, June 4th, 2024. I'll entertain a motion on the minutes.
Move that we approve the minutes from June 4th, 2024.
Second.
It's been moved by the Alderman from the 9th Ward, seconded by the Alderwoman from the 1st Ward, that we approve our meeting minutes from June 4th, 2024. Madam Clerk, please call the roll.
Alderwoman Spencer.
Aye.
Alderman Orion.
Aye.
Alderwoman Schweitzer.
Aye.
Alderman Browning.
Aye.
Chair Cone.
Aye.
We have 5 aye votes.
Great. Next on the agenda, we have 2 board bills that we're hearing today. I believe we wanted to hear them in kind of reverse order, if I'm not mistaken, so we'll take board bill number 50 first.
Chairman, if I may, there's going to be a presentation regarding Board Bill 50 to the committee so that they can.
Great. Is the mic on?
Yeah. Could you hear me or need me to repeat?
I could hear you.
Okay.
Essentially, the director was sharing that there's going to be a presentation. So.
Good morning, everyone.
Good morning.
We are dreamers and believers. We believe that St. Louis Lambert International Airport can be a beacon in not only the Midwest, not only the nation, but globally. Today, Rebecca Perry Glickstein of PFM Financial Advisors will present to you information on Board Bill 50, which is an interim finance bill program for the airport.
I'm sorry, sir. Could you introduce yourself for the public?
I am sorry. My name is Larry Rhodes. I'm the fiscal officer within the Finance and Development section representing the Comptroller's Office. Sorry about that. Rebecca?
Yes, I'm here. Good morning.
Good morning.
I need to be sworn in or what have you?
You're fine.
Oh, all right, great. Well, good morning, everyone. Thanks for your time. I'm sorry I could not be there in person. I believe that the committee has received a presentation on the interim financing program that Larry just referenced. This is the same presentation that was given to the Airport Commission last week. So I'm going to step through that presentation and then certainly prepared to respond to any questions that you may have. On the second page of the presentation, I'm going to start there. As the committee knows, the airport has significant financing needs upcoming related to funding the various capital plans or capital projects within its master plan program. To better align the actual cash flow needs with borrowing activity, thereby minimizing the interest costs associated with the program, among other benefits, the city is intending with the approval of the Board of Aldermen to establish an interim financing program. The interim financing program will allow the city to borrow funds for the airport projects on a revolving as needed basis. These borrowings would be at short-term rates, and periodically the city for the airport would issue long-term revenue bonds. It's long-term revenue bonds to refinance the outstanding obligations under the interim financing program. The program would be established to allow projects to be financed on a non-AMT, AMT, or taxable basis. And draws under the program would be available to the airport for use within 48 hours. So this program, as I said, is going to be revolving. It's very time efficient, lowers interest costs for the city and the airport. In keeping with this, Board Bill 50 is seeking authorization to establish an interim financing program in an amount not to exceed 650 million outstanding at any time. Again, reflecting the revolving nature of the program. The 650 million corresponds with the cost of future capital projects that have been approved by the airlines, and I believe this committee. The Third Amendment projects, I think, is how they are being referenced. At this point, we're contemplating an interim financing program that could be consist of publicly offered commercial paper and or direct bank facility in the form of a revolving line of credit. We are in the process of getting ready to issue a bank facility request for expressions of interest from highly rated banks, and looking for proposals on commercial paper, revolving lines of credit, or other vehicles that may be appropriate for the program that the city is seeking to establish. The REI process will allow the city to determine what vehicle or vehicles are best suited based on terms and conditions, as well as pricing, and then also bank capacity. It is possible that we will not initially seek bank facilities for the full amount of the authorization, but something smaller, because any bank facility that we have, whether we're using it or not, is going to incur a cost, which, that cost is associated with the bank or banks actually setting aside the amount of the facility for the city's use. And so that comes with a cost. So the airport staff is working on identifying cash flow needs for perhaps the next 12, 18, 24 months. And that will help us determine kind of the initial size of the bank facilities that we will be seeking to obtain. Going on to the next slide, it's kind of reiterating the purpose of the interim financing program. Provides financing flexibility. It mitigates any timing uncertainty as it relates to kind of funding through long-term bonds, which would kind of incur additional costs for funds that may not be spent immediately. Also, using a revolving program will allow the airport to specifically identify the cost that it has incurred for projects and to issue long-term bonds consistent with that cost. It would help to address any underfunding or overfunding. Also, in a typical interest rate environment, as I mentioned, the short-term nature of these vehicles reduces negative arbitrage and the cost of capitalized interest, etc. Programs also provide liquidity for the airport during the construction program. There are considerations with these programs that are not specific to the airport per se, but just the nature of the programs. As we're going through now, there are costs associated with establishing the program, the REI process, identifying banks, negotiating the legal documents that will support the program, either commercial paper and or revolving line of credit. Also, as I mentioned, that once we sign agreements with a bank or banks, the city will start to incur cost associated with those banks setting aside the funds so that they're readily available to the city at, very short notice. As I mentioned, typically 48 hours. The airport can say, we need $20 million on Monday, and by Wednesday, they will have that money to pay contracts or whatever else the expenditure need is. It should be noted that the pricing of the programs, the facilities for the program, also to the extent publicly offered, to a certain extent can be impacted, so costs could increase if the credit of the airport deteriorates, which we do not expect. The airport has been on an excellent positive trajectory of its credit, or if the bank facility provider's credit deteriorates. So those are, considerations, as I said, with programs generally. There are also interest rate risk, which is, kind of standard. Interest rates go up and down. That's what they do. So if rates increase, program can be more expensive. If they decrease, get the benefit of that as well. Potential market access risk. This particularly relates to the ability of the airport to issue long-term bonds to take out either commercial paper that's been issued or to repay draws under a revolving line of credit. That would most likely be a full market disruption, not necessarily related to the credit, the airport's credit. As I said, the airport has excellent credit ratings at this point. There's also a renewal risk that's associated with the bank facilities that we'll obtain. Typically, they run terms of 1 to 5 years. I believe we're seeking authorization for a 10-year interim financing program at this point. When a bank facility expires, there's a small chance that the airport, the city would not be able to find another bank to replace that facility if the current provider isn't available or doesn't want to do that. Again, small risk, but wanted to just flag those for the committee in terms of full disclosure. Going to the next slide, which is slide 4, it's the discussion looking at commercial paper. And I should have said at the top, there are a variety of interim financing programs that are common in the municipal market. We are looking at publicly offered commercial paper supported by a direct pay letter of credit and or direct loan revolving line of credit with a specific bank. We're looking at those two vehicles because they are well known in the market, very common. Other vehicles can be a little more complicated, more time consuming, to the extent that they are publicly offered programs, the investors, and some of those programs, that pool of investors is not as robust as it is for, say, commercial paper. So, the point here is to make the city and airports kind of everyday operations easier and more efficient, not necessarily, and not expose the city and the airport to additional risk. So that's why we're focused on commercial paper and the revolving line of credit. So on slide 4, some details around commercial paper. As I said, we're looking for support to support commercial paper program with a direct pay letter of credit. these would be publicly offered securities, and so there would be an offering memorandum, which is the disclosure document, which you guys are familiar with from the cities and the airports bond issues. It's the preliminary official statement for commercial paper. It's called an offering memorandum. That program would need ratings from rating agencies as well as CUSIPs. We're seeking authorization, as I said, for 650 million. We may only obtain initially bank facilities for amount less than that, say 300 million, although that's just an example. And then as soon as the facilities are established, the funds are drawn, CP is issued, or draws are made under the revolving line of credit on an as-needed basis. So you're only incurring kind of the interest cost for draws that are actually made, not for the full amount. Let's see, maturity, commercial paper cannot have a maturity any greater than 270 days, but it can be issued for one to those 270 days. You can issue it for 1 day, 7 days, 2 months, whatever, within that range. And the maturity on any given issuance is determined by, would be determined by the airport's kind of needs at the time, and also market conditions, where kind of the sweet spot is in the market within that time frame, kind of where rates are most attractive. It's important to note for commercial paper secured by a direct pay letter of credit, as I said, there's an offering memorandum, but the focus of the credit is the bank that is providing the letter of credit, the bank or banks that are providing the direct pay letters of credit. At the end of the day, investors would be buying commercial paper based on the bank's credit, right? They will be paid directly by the bank. They're not looking at the airport's credit. That's one of the benefits of a direct pay letter of credit for commercial paper, variable bonds, etc. The bank would be looking at the airport's credit, but not investors. And the little graphic on the side kind of is just a depiction on how the revolving nature works for commercial paper. So if we issued $20 million of commercial paper to mature in 2 months, because that 2-month spot is a good spot in terms of interest rates. I've issued 20 million in 2 months, that commercial paper will mature. Interest is paid at maturity. There is no optional redemption feature on commercial paper. It matures when it matures. At that time, and this is full expectation for this program, the CP dealer will, knowing he's got a $20 million maturity coming up, will seek new investors for $20 million. So the commercial paper matures in 2 months. We pay the existing holders their 20 million plus interest. And that 20 million is reissued in the market. So there's a new investor at a new rate, except that's called rolling the commercial paper. We can roll the commercial paper for as long as we want, up to the amount that's available under the bank facility. And as I said, the intent is that periodically with the commercial paper or the revolving line of credit, after a period of time that would coincide with when it's convenient for the airport to be in the market with long-term bonds, those draws and outstanding commercial paper would be refunded with the proceeds from the long-term bond issue, at which point the capacity under those bank facilities becomes available again to the city and the airport for additional draws, etc. So that's again, the revolving nature of the program. Going on to just a little bit of information about the commercial paper program participants. There are some entities that the city would need to engage for a commercial paper that are beyond your typical bond issue participants. There's a commercial paper dealer that is the underwriting firm that would actually market and sell the commercial paper and do that on a rolling basis. There's also an issuing and paying agent, which may or may not be the trustee, but the issuing and paying agent's specific role is to manage the payment of commercial paper as it matures, the draws, managing the cash flow from draws on the bank, managing the interest that's coming due. That is, they facilitate kind of the cash flow around the issuance, the rolling, the paying off at maturity of commercial paper. And then, of course, a letter of credit bank or banks. And then, investors. But again, this is really trying to focus on entities that are not typically involved in a traditional long-term bond issue by the airport. Moving on to a revolving line of credit. This is a direct loan with a bank or banks. There are no investors involved in these transactions. When the airport needs 20 million, they reach out to the bank and say, I need $20 million. And in a couple of days, they will get that 20 million. These securities are not, it's not a security. Nothing is publicly offered. There is no disclosure document required for a line of credit. There are no ratings required for a line of credit, no QSIP. These programs tend to be, very streamlined. The only additional party that is involved, that isn't typically involved in a long-term transaction, is the lending bank, the bank that's providing the line of credit, again, bank or banks. With commercial paper, the interest rates are determined by, in the public market, getting investors, selling the paper at whatever prevailing market rates are. For a revolving line of credit, the utilized fee, which is the interest rate paid on draws, is established by using a public market index for short-term bonds, plus typically a spread. So, the market dynamic is still there. Rates go up, those indices go up, and that's reflected in rates. Rates go down, rates for the indices go down, and, that's reflected in the ultimate rate. Let's see, they're under a line of credit, like commercial paper, there's no ability for the bank to put back, say to the airport, to the city, hey, we want our money back early, right? There's no put feature. So, there's no credit support needed with these facilities. I believe that's what I wanted to cover on slide 6, and slide 7 again is, kind of who's involved in a line of credit program. Again, it's the additional team member would be the bank or banks providing the line of credit. On slide 8, you'll see kind of a side-by-side comparison of commercial paper secured by direct pay letter of credit and revolving bank, line of credit from a bank. I think I've covered most of these, if not all of these items. Kind of the details of, the life of the bank facility, the documentation that goes along with the program, whether ratings are needed or not, pros and cons of the program. So I think I've touched on most of these, but at this point, I would be happy to take any questions or go back or in greater detail as the committee.
Thank you.
What-
for that. Oh,
I'm sorry, just one thing to note. The interim financing facilities are very, very common in the municipal finance industry sector, especially for entities that have a large capital program that requires kind of cash flow. These are kind of cash flow borrowings to fund cash flow without incurring a big interest cost. Very common for airports that have capital programs. The big airports, Los Angeles World Airports, Houston, Dallas Fort Worth, SFO, smaller entities as well, Austin, Ohio, Nashville, Norfolk. So this is not an unusual activity in the airport sector, and it is one that has a lot of advantages that we've already talked about. Primarily reduction in cost and financing flexibility. So with that, I will stop and take questions.
Larry, do you have anything further that you'd like to add?
If there are no questions,
Is there anything else that you'd like to add? And then I'll take questions from the committee.
we are good.
Okay, and Director, is there anything that you would like to add in terms of we obviously went through a very thorough presentation on the kind of financial side of this, but translating that into the operational side and what this means for Lambert specifically, do you want to elaborate on that at all, or?
Yes, Chairman. So, this is a huge program that we're asking for as we think about the future of our airport. And as we brought the third amendment to you a couple of weeks ago, we wanted to be able to look at the long-term ability to keep the projects moving, not have to stop and start. And as you know, if we go out for bond markets, a lot of times that takes us 6 or 7 months in the process. If there's projects that we need to start, waiting for the monies through the bond sale can be challenging and delay our program. So the opportunity to look at commercial paper, the opportunity to look at these short-term revolving loans is critical to this industry and these large programs. So we worked with the Comptroller's Office and our financial consultants the last several months, put this program together to allow us to be the most efficient as we think about building this new terminal and all of these enabling projects that we're talking about. So it is common for airports, as Rebecca said, and I think we have seen a lot of results across the country where it's been very successful, not only in keeping the projects moving, but in the savings that can be generated versus paying interest out on $650 million for the long term, being able to take out these shorter terms with maybe better interest rates in the short term, and then paying those back as you issue the bonds, again, paying them back in a shorter term. So we have seen programs across the country where there's been some nice savings by entering programs like this for projects of this nature.
Thank you. And I don't know if this question would be for you or for Rebecca, but this is primarily used as essentially like a gap financing tool, right? So you have, because each draw would essentially be limited to a 270-day period, which is roughly 9 months. So you can issue or draw on the revolving line of credit in order to basically cover expenses, keep a project moving while the kind of more long-term financing is put in place.
That's correct. We look at this as a very short term. As we said, sometimes as these projects come due, we have a short notice once we've been able to let the programs. There's a short time frame, and to wait for the length of period that it would take to issue the debt, these programs allow you to have that money within 24, 48 hours so that we can pay the contractors and assure that we have consistency as the projects move forward. So yes, that is correct.
Great. And then just,
If I could just, I'm sorry, excuse me, just to note, so the 270-day maximum maturity is true for commercial paper. And again, it's 270 days and you can roll that for another 270 days. There is the maturity under a revolving line of credit is really linked to the life of the bank facility itself. So you can make a draw and, pay it back a year later, right? Or 2 years later, or before the facility expires. So there's that greater flexibility with a revolving line of credit. You can also pay a drawback at any time, typically on an interest payment date. But I just wanted to clarify that 270-day max maturity is really related to commercial paper, does not apply to a revolving line of credit with a bank.
Thank you. And then the revolving line of credit with the bank, am I correct in understanding, so that would expire 2034? In the board bill, there's an expiration date of 2034 that all
Yep.
funds have to be repaid by that point in time.
Right, so that 2034 is related to the authorization for the interim financing program. Bank facilities, either direct pay letters of credit or for revolving lines of credit, they typically have expiration dates or terms of 1 to 5 years. So within that 10-year kind of authorization window, we could run through several kind of terms of bank facilities, right? I think this program is being looked at not only in terms of the Third Amendment projects, but any additional projects that may be authorized on the Consolidated Terminal Program. So it may be that in 9 years, I don't think the program is going to last that long, but it would be possible to come back to the Board of Aldermen, this committee, and seek an extension of the authorization. So the authorization being sought in the board bill is not tied to the terms of the bank facilities that we'll be using. They will be almost by guaranteed much shorter than the 10 years, and we will just kind of extend them or get new bank facilities.
Great, thank you. And then, so we're talking about reducing costs, but typically, revolving lines of credit are higher interest rates than what you would get with a bond or, a kind of fixed loan. So what are the interest rates anticipated with something like this? I mean, we're obviously in a high interest rate environment right now in general, but, typically
Yes.
I think the average person, when they hear revolving line of credit, they're thinking credit cards or things of that nature, and those are obviously very high interest rates. So, on a project like this or a program like this, what does a typical interest rate look like, prime plus what?
Right. So you're correct. Typically, a revolving line of credit would carry a slightly higher interest rate than, say, a publicly offered piece of commercial paper. That additional cost can be offset by the ease of kind of executing a line of credit. Just the less paperwork. You don't need credit ratings. You don't need a disclosure document. You don't need QSIP, etc. So that can be very attractive to an issuer. Just that kind of efficiency.
And these
In
are also-
terms
they're
of
not-
rates-
they're not unsecured either. We have revenue streams dedicated. So just to clarify, I know it's nothing like a credit card, but so I just want to make sure that, we're being transparent though, in terms of this would typically be a higher interest rate than what our standard, kind of bond capacity would be. But, the flexibility of the program and the savings from not having to go back out to bond counsel and have Rhonda's staff running all over the place, trying to get ready for these things, and the comptroller's office also, hopefully saving some time as well, or where we'll find some efficiency here.
And one additional
Right.
One additional thing on that is that they will go out for requests for banks so that they can also look at the best proposals out there. So there will be banks competing for this. So there's also some opportunity to have that competition and get the best program there as well. So.
And I would just to try to circle back. So, for commercial paper, the direct pay line of credit, right? That will pay that bank or the banks off providing the letter of credit, not the line of credit, my apologies. The letter of credit, letter of credit fee, right? And that again is for that bank to hold the capacity for the city. The commercial paper, when it's sold, will be sold at current market rates. And again, we're going to highly rated banks. So for, tax exempt commercial paper, we would expect that the rate on that commercial paper to be SIFMA plus a small spread. So SIFMA is the tax exempt short-term index used in the municipal market. Typically, because we have a direct pay letter of credit, because we will be using only highly rated banks, those commercial paper issuances would be at SIFMA plus a small spread. So depending on the bank, I'm going to say 3 to 5 basis points. Right now, SIFMA is at about 2.9%. To your point, Chairman, right now, short-term rates are higher. The yield curve is inverted. So, those rates will fluctuate as the market fluctuates. Expectation is that the inversion will not, which is unusual, will kind of rectify itself, and then you'll see your standard increasing slope. So you'll have shorter rates on the short end, lower rates on the short end, and then higher rates on the long end. So, that dynamic is at play at the moment. The expectation is that it will not continue, and that will go back to the traditional kind of, if you borrow on the short end of the curve, your interest rates will be lower. In terms of the cost of the actual letter of credit, that is very dependent on the bank. We received for another client, I guess about 3 weeks ago, proposals for direct pay letter of credit, as well as revolving bank loans, line of credit. And I got to tell you that the bids on the letters of credit, as well as the revolving lines of credit, were all over the place. From a high of, for a letter of credit for 2 years, 30 basis points, from a low of 30 basis points for a 2-year letter of credit to a high of 110 basis points. So that there is not what you would expect is kind of everybody would be kind of in the same area, but that's not the case. So I'm super hesitant to try to say, how much direct pay letter of credit might cost the city at this point. But to Rhonda's point, we'll go out for bids, and pricing definitely be a major consideration in terms of what banks we look at.
Oh, I'm sure with those basis points. So with just touching base on the banks themselves real quick. So we've talked about, we would obviously go with a higher rated bank, but just in terms of like market cap, because banks have funding requirements, capitalization requirements that they have on a daily basis for even making draws for, these types of lines of credit. Are we envisioning that this would be handled by, a regional bank or a larger bank versus a local bank? I would imagine a lot of local banks probably don't have that type of funding capacity if we're making a $100 million draw on one day. But I could be wrong. I'm just kind of curious, what types of banks are generally participating in these types of programs?
So we have a list of banks to whom we will send the REI. And to your point, some banks, just do not play in this space. Either they don't do letters of credit, they don't do lines of credit, or they just are not active in the interim financing space. We're going to try to make sure our list is kind of all encompassing. So hitting the very big banks that you would kind of expect to see in this space, Bank of America, JP Morgan, as well as smaller banks, PNC, TD, and look to, see who comes in. I believe we have maybe, I don't know, 15 to 20 banks on the list. I would expect that we would get responses from maybe half of that group. And it will, be based on whether they're active in the business, whether they have the capacity, and their own kind of internal capital requirements. If they're so high, they may come in, but that cost for them to do this will show up in their bid, right? So we will be looking for highly rated banks offering good terms and conditions, no onerous covenants for the city and the airport, and attractive borrowing rates, both on the letter of credit side on the CP and on the revolving line of credit on those internal borrowing rates. And that's really a function of the bank and their own internal kind of capital needs and requirements.
Thank you. I would respectfully disagree that TD and PNC are smaller banks, but that's a different discussion for another time. I was thinking more so smaller being for example, like a Stifel locally, the kind of under 5 billion in assets type of a bank. But PNC I consider more of a regional bank, like a U.S. bank type of a situation, but there's certainly national players versus a regional or local. But I'll go. I'm not trying to. I'm just kind of throwing that out there. But it is great perspective for me to know. I mean, that's really kind of those are the players, so to speak.
Right. And Stifel will receive the REI, right? So if they respond, then they respond, and we'll take a look at their proposal. I've done some work for the city with Stifel on direct, a bank loan.
Sure.
Wasn't
And
a revolving line of
I'm
credit.
not trying.
But
It would be nice if local banks and facilities, whether that's Stifel or Busey or there's not many local bank facilities and Midwest Bank Center, but some of them don't even have the programs in place or facilities in place to be able to do this type of a program. So I understand that, but or even if there's credit unions that are able to do this, but I don't think a lot of them are structured and handle this type of program. But I'm just saying that because I think as we kind of enter into an era where banks are getting bigger and bigger, it's nice to be able to support our local banks here where possible. So, but understand the kind of restrictions and capability issues along with that as well. So, but I will leave that up to you all as the professionals. Just want to put that nod out there. And then I'll open it up for questions from the committee. Vice Chair Spencer.
Thank you. No, this was a pretty comprehensive presentation. And it sounds like we're going to be able to hopefully save some money. And I'm just grateful for the presentation here and the movement forward on the project. Thank you, Mr. Chair.
Great, thank you. Alderman Narayan.
No questions. Thank you for the presentation. Thorough as always.
Alderwoman Schweitzer.
Thank you so much. I also appreciate the presentation. Chairman Cohn asked most of the questions that I had. I think we all can see what happens if projects in the city are slowed down for any reason, and having the ability to move more quickly on these big projects, I think will not only save money in the borrowing sense, but with inflation and the cost of projects always going up, the more we can keep things moving, I know just makes sense. So I appreciate the thoughtfulness and the savviness of this. So thank you for your time.
Alderman Browning.
No questions either. Just appreciate all of you and all your work to improve the airport and make sure that it's successful for our region. Thank you.
Wonderful. Are there any further comments, questions? If not, Madam Clerk, are there any folks online that had comments?
I did see Mr. David Stenfield's hand up earlier.
Not sure if you can hear me. Apologies, I have my hand up in reference to one of the topics that was being discussed, but I think my colleague Rebecca covered it really well, so I respectfully lowered my hand. Thank you, though.
Thank you, David. Thank you for being here. Larry, if you want to close on the board bill, that'd be wonderful.
Yes, if there are no more questions, I would ask that the committee pass Board Bill 50.
Thank you. Are there any further comments or questions from committee? I don't see any other alderperson in the room. Hearing and seeing none, I'll entertain a motion on board bill number 50.
I move
I
that
move.
we, oh,
Go ahead.
I move that we pass Board Bill 50 with a due pass recommendation.
Second.
It's been moved by the alderwoman from the 1st, seconded by the alderman from the 4th that we
Previous
pass
roll.
number 50 with the due pass recommendation. There's been a call for previous roll. Is there any objection to previous roll? Hearing and seeing none, Board Bill 50 passes out with a due pass recommendation. Thank you very much. Next on the agenda is Board Bill number 47, and we have the good director here to present on Board Bill 47.
Thank you, Chair Cohn. And good morning again to all the TNC committee. So Board Bill 47 is an ordinance that will authorize a public works program, which then authorizes us to do the lettings for all of these projects. The project list was attached to the board bill. The total amount of that, as you have heard in prior conversation, is $650,400,000. And the projects range. From design of the new terminal itself to repairs that we need to maintain in the interim to keep the terminals alive, to the design of the roadway system, the design of a new garage. So it encompasses a lot of things. If you'll recall, 2 weeks ago, we brought forward that third amendment. That was an agreement with our airlines to extend our existing use and lease agreement by 2 years and the authority for this $650 million to spend, including the design, which is a critical step as we move forward to hopefully ultimately the approval of the construction. So this board bill just creates that ordinance that allows the Public Works program, which allows us to go out for lettings. As mentioned, there will be a number of financing involved in this, in addition to the board bill that we talked about prior with commercial paper, with revolving loans, and ultimately bond sales. We will also be using PFCs. That's the passenger facility charge that is collected on every ticket and goes back to the point of origin airport where the passenger left. We will also be using our airport development fund, and of course, we'll seek any federal grant opportunities that are out there. So hopefully, we'll be able to encompass some of those grant opportunities and lessen the amount that we will need to go out for the bond sales or the commercial paper or revolving loans. So with that, I'm happy to answer any questions, but I would ask for your approval of Board Bill 47.
Are there any questions on Board Bill 47 or comments? Vice Chair Spencer.
I don't have any questions. Thank you, Mr. Chair.
Alderman Narayan.
No questions. Thank you.
Alderwoman Schweitzer.
No questions, thanks.
Alderman Browning.
No questions.
I feel like this is a very large and momentous board bill. I'm super excited for this. It's been a long time coming, and I think that there are exciting projects happening to facilitate our terminal consolidation plan at the airport. So I just want to kind of throw that out into the congratulate you and your staff and the others that are involved. And you know, the comptroller's office has so diligently sent staff, and the bond counsel here. I don't know, Charles, do you have any? I hate to have you down here and not even acknowledge you or your time. But this is a super exciting and incredible opportunity for our airport, and I'm happy to be a part of it and happy to work with you on the team to make it happen. So if there's no other questions, I'll entertain a motion on Board Bill 47.
I move that we pass Board Bill 47 with a due pass recommendation.
Second, previous roll.
It's been moved by the Alderman from the 4th, seconded by the Alderman from the 9th, that we pass Board Bill 47 out with a due pass recommendation. There's been a call for previous roll. Is there any objection to previous roll? Hearing and seeing none, Board Bill 47 passes out with a due pass recommendation. Thank you all for your time this morning. Very, very exciting. We don't have any other items on the agenda for today. All members were present. Madam Clerk, please make note. And with that, I'll entertain a motion to adjourn.
So moved.
Second, previous roll.
It's been moved and seconded, moved by the Alderman from the 9th, seconded by the Alderwoman from the 1st, so we adjourn. There's been a call for previous roll. Hearing no objection, we stand adjourned.
Thank you
Thank
all very
you.
much.
Thank you.
Thank you.